Hi everyone, thank you for coming. My name is Jennifer Douard, working from the law firm called G255. Very happy to present and introduce this panel that we have put together of very distinguished panelists coming from all around the world. Special thanks to our US friends who actually crossed the ocean. So thank you to Mike from the CFTC. We also have Caroline from OECD, Giles from IOSCO, International Organization of Securities Commission, based in Madrid, and Marius, well-known Marius from Bank of Lithuania. I then give the floor to Angie from Forkast News, who will moderate this panel, but please give all our dear panelists a huge round of applause.
Merci, Jennifer, and merci, everyone, for really giving us the platform to speak to you. And not really you, just those here in the audience. By you, we are talking about a global audience that are keen to understand blockchain technology, its applications. You may be doing projects right now, you may be in the technology space, you are likely looking for future guidance. I'm personally and professionally really thrilled to be here. So just a quick backstory, I am a former Bloomberg television anchor based in Hong Kong. So I'm used to this gang of people here on this stage. I will tell you that having founded Forkast News, that the kind of professionalism that these folks provide here on this stage is really, really insightful, innovative, some would argue needed, others would argue not. But that is exactly why this space is so interesting. So I will be your guide. I serve you. There may be an opportunity to also ask questions, and really this is going to be a conversation. But please help me welcome once again our esteemed panelists, Caroline Malcolm from OECD, Marius Jurgilas, Bank of Lithuania, Giles Ward of IOSCO, and Mike Gill, CFTC. We're here to talk about international regulatory cooperation for the development of financial innovation. That's a lot of words for how do current regulators around the world think about blockchain and think about blockchain technology as it applies not only to their nations, but to their people. We've got some leading agencies in the world on this stage, and I will let each of them tell you about their organization and why they're thinking about blockchain. Caroline, I'll start with you.
Thanks, Angie, and thank you also to Paris Blockchain Week Summit for the invitation to be here. As you said, I lead the OECD's Blockchain Policy Centre. We're working across the policy spectrum on issues relating to blockchain and other distributed ledger technology, and working to really ensure that there is a global reference point on the policy issues that arise in this space.
I'm Giles Ward. I work for IOSCO. IOSCO is an organization of 128 securities regulators from over 115 countries around the world. We have three objectives: to promote investor protection, market integrity, and financial stability risks. And we do this with through two tools. First of all, through the exchange of information, both about policy, but also about enforcement. And secondly, through the development or promotion of common or consistent international standards. In terms of how we're looking at the crypto sphere, we're applying our overarching approach of why, what, and how. So first of all, we're trying to identify why we should be interested in the crypto sphere. Broadly speaking, we are because we think it poses potentially investor protection and market integrity risks. In terms of what, we have been developing some thinking through various networks and a potential framework about how we think about what these assets are. And secondly, in terms of how, we are also developing some thinking about what standards regulators around the world should be considering when they're thinking about, in particular, trading platforms.
My name is Mike Gill. I serve as the Chief of Staff and Chief Operating Officer of the Commodity Futures Trading Commission in the United States. I joined the CFTC a couple years ago from the private sector, and the chairman and I had this crazy idea to create an innovation startup within a government agency. And so we conceptualized this thing called Lab CFTC, and like most folks out in the investment space, we then hired smart people to actually run it. That lab was intended to help us understand artificial intelligence, a lot of the algorithmic trading that's really the momentum in the market. But it also, not that we formed it for this, but it became our interaction with blockchain and DLT in the crypto universe. And so it helped us get comfortable with licensing the first 2 swap execution facilities that would trade blockchain. We then licensed a clearinghouse that physically settled Bitcoin. Did I say blockchain? Bitcoin. And all through those steps, those were swaps, those were eligible contract participants, they were physically settled, and it sort of allowed us to learn and get a comfort level with Bitcoin to the point when SIBO and the CME came to us with their Bitcoin futures contract, which now is kind of yesterday's news and not very exciting, but at the time was not particularly popular in the US government, was not popular with many market participants. We actually got a lot of critical letters. But we felt it was important that to let sort of innovation work. We worked with the exchanges on those 2 products, and in retrospect, I think it was a healthy thing for the marketplace to bring a federal role in the United States to Bitcoin, and then we can talk more later about where that may evolve to.
Hi, Marius Jurgilas, Bank of Lithuania, and I'm a board member at the Bank of Lithuania. And Bank of Lithuania is an integrated financial markets regulator, which in a human language means that we have the monetary policy authority, you know, the guys who are issuing money, dealing with the payment systems. We have a financial stability authority, which means that we supervise the banks and ensure that they're prudent. We also have a financial markets regulator, like my colleague, and we license entities who deal in financial markets, and we act as a semi-court if someone misbehaves in misinforming investors on what they promise in the white paper and things like that. So maybe that gives an introduction of why we care about blockchain and how do we view that. So obviously blockchain could be used for multiple things, ranging from, you know, a better dissemination of information, security, maybe even distribution of cash. So as a central bank, we're very much interested in how that technology could be used in our internal processes as a central bank. The one being, you know, the distribution of cash and issuance of currency. And I'll talk about that probably later. And the second one is, as a supervisory authority, we want to understand what is happening on the ground. And the reason why I have been walking around here and talking to people on the field is trying to understand what exactly is happening and what schemes and ways of implementing new innovative technologies are being developed right now. So how do we do that? We bring the industry into the house, and the best way to do that is to allow them to develop financial products together with the regulator. And I'll talk about that later as well.
So I'm going to address the elephant in the room, which is when we talk about blockchain and cryptocurrency and really why Bitcoin came into existence. It really was a reaction, I think, to the standard and the internalization and the traditional structures of finance. And it was an alternative. And so the question is this intellectually and philosophically something that is good for Bitcoin, cryptocurrency, alternatives, assets, blockchain? That we as you know, we as professionals on this stage, thinking about it from a regulatory point of view, is this something that we, and by we I mean you, should even be doing?
You mean in terms of sort of giving our blessing to mainstreaming it with regulation.
Being in this space.
So since we've already have, I think it's a brilliant idea. No, I mean, that's the dilemma we faced in the fall of 2017 was, we've been working with the exchanges on whether or not, you know what, let me step back a second and put in the disclaimer. These are my views, not that of the agency or the commissioners, before I start telling you what I think and get my agency in trouble. In the fall of 2017, there was a very large blockchain community. Bitcoin had been very popular for a couple of years. About every law firm on the earth suddenly had a blockchain practice, even though most of them didn't know what the law was or why they needed a practice. I was included in that. And in the U.S. government, you had sort of this is just the tulips, right? This is nothing. Why would we even want this to have any status? But through Lab CFTC and through sort of meeting with the various people in the community, and we sort of understood what made us feel comfortable with this was stepping out of our US dollar-centric world and thinking about other parts of the planet where the currency is not stable. We used the example, one of the market participants came in and talked about in Sierra Leone, if you want to go to the grocery store, you use the local currency. If you want to, pay, landscaping and such like, you use the local currency. If you want to buy a car, you got to use dollars or euros. And so that's the type of person that would appreciate having a decentralized mechanism for payments. So Bitcoin didn't quite evolve into that, but that impressed upon us that this wasn't just the tulip mania, that there was something behind all this. And it wasn't our job to say this is good or bad. It was our job to look at it and say, could this be manipulated? Could this be used to defraud someone? And once we put our sort of metrics of how you handle derivatives regulation on top of the cash markets, and we did layer some extra, we can talk about that if we get into the future, but we did layer some extra asks, requests. We couldn't force them to do it because it wasn't in the statute or regs, but we requested the exchanges to put some additional safeguards in. But we felt this was, the US financial markets are large, complex, and successful because of innovation. So there's been over, I think we counted 12,000 different types of future contracts have been introduced on the exchanges since 2004. Most of them last not very long, they don't get any liquidity, and they go away. But people throw things up on the wall and see if it sticks. This was a leap because it wasn't popular with other parts of the government at the time, but we felt comfortable that we could manage the derivative aspect of it.
I think there's also a different angle, which is that of industry. And I think what we're hearing is that there is a lot of demand for regulators to step into this space, because I think there's a realization that without providing regulatory certainty, the ability for these new type of asset class to really scale and access traditional investment markets is going to be extremely difficult. You're just simply not going to get the volume that you might otherwise get if you don't have certainty about what the regulators will do, because the regulators are clearly watching this space. And I think that also ties in with, I guess, the second part of your question, Angie, which is the genesis of this industry and the fact that you still have a lot of players in this industry who do have a sort of anti-establishment mindset, and I think that's why taking a multi-stakeholder approach to the development of the regulatory environment is actually really critical, because without that, and we know because of the nature of the technology itself, regulation alone is probably not going to cut it. You're also going to need market norms, you're going to need other influences in the market to really regulate the technology, particularly if we see an evolution towards more decentralized autonomous organizations, permissionless blockchains. They will be able to move out of the regulatory framework. And so without having a common understanding about why some of those things that Mike talked about are important, they won't be integrated in that sort of non-traditional space as well.
If I could come back to original question, why Bitcoin, why cryptocurrencies? And I'll talk about crypto assets later. Usually when you have people on the stage, they say, you know, what kind of products are they selling? You know, and we are selling a product here. Do you know what product do we sell? Anyone? It's called trust. As a regulator, as a standard-setting body, as a monetary authority, we're selling trust. And if you trust us, there will not be any conference like this. So if something happened back then, you know, in the epicenter of a financial crisis, you know, some stories started brewing and people started throwing ideas around, but maybe we can do better. And that remains still to be seen. So my point is that if regulators, monetary authorities start selling the product better, you know, if the trust is being restored, there won't be any need to talk about a distributed way of doing anything. Maybe we can, as regulators, do that job by ourselves. And now they're coming back to this point of crypto assets, right? So the point that cryptocurrencies can replace the currency being issued by the central bank is not being debated right now. Probably, you know, at some point, probably in China, you know, the guys who invented cash will invent the digital cash. They will roll it out somewhere in the corner of the country, and we will not even notice that for 10 years, and they'll say, we have been testing that for 10 years, and that will become the new standard. But in terms of crypto assets, that's a very interesting proposition, because it allows, in some places of the world where capital markets are not that well developed, like in the United States, where there is no venture capital community like in Silicon Valley, to attract risk-loving individuals in a proper way without pump and dump schemes and misinforming investors into productive yet very risky activity. And maybe that's what we should be cooperating on and implementing.
Well, I thank you for those very candid answers. Is there going to be one country or one organization that is going to lead the way? Because you said something that is very critical, Carolyn. It's that the fact that there is this search for guidance from the regulatory bodies, but what we are all experiencing is that the regulatory bodies, from states to federal to nationhoods to international organizations, are still trying to figure it out as well. Where is this evolving to or converging into? What is that? Where will we get to a place of standardization, or will we ever get there?
Well, I mean, as you said, I think there's sort of two questions that you've put out there. First of all, the sort of demand for regulation, possibly from industry, and secondly, the ability of regulators to supply that regulatory certainty. I mean, in terms of the demand, as you say, at the outset, there's very little demand for regulation, but once people start becoming more established, they see that the benefits that can accrue through the establishment of trust and so forth. And secondly, they also understand the mutuality of a lot of regulation, that a lot of regulation applies to the critical gatekeeper or the critical central function. And there's a sort of mutuality, therefore, in terms of industry assuming that gatekeeper function. Now, from the regulatory perspective, I think it's always worth bearing in mind that there's perhaps sort of 4 stages of technological regulation that regulators typically need to go through: ignorance, arrogance, humility, utility. When a new product or a new technology pops on the scene, you know, the first question regulators ask is, what the hell is this? They then obviously go out, start asking questions, and they tend to often then assume that they are the experts in this area simply because they know more about crypto than the insurance supervision department. There's a third stage where it turns out that either, you know, when they start pressing deeper, that the questions are actually more complex, or else what often happens is simply that the forecasts or trends that they made their assumptions on turn out not to be the case. And we then get to the humility stage, and finally, would like to say at the end of the road, we have a utility stage where regulators understand roughly where we are with the thing and what can be done and what can't be done. I'd like to say think that we're probably now in stage 3 or 4, at least among sort of, the main communities. But as I say, this is why IOSCO's approach, although it seems sort of quite talkative, the first stage is making sure that everyone is on the same page in terms of their information. So we do an awful lot of information exchange through things like the ICO network, the FinTech network, through board meetings and so forth. Because if you're going to develop a consistent one-country solution, then everyone's got to be on the same page in terms of that regulatory cycle, because otherwise, if everyone's in the arrogant stage, then everyone's got the incentive to just run off and do what they think is the best thing.
Right now, that one country seems to be the United States.
Oh, I was just about to jump in and object, but I will object for you. I don't think so. We're all over the map right now in the United States. The ICO issue took up all the bandwidth of the regulatory agencies in the United States, and the Securities and Exchange Commission, our sister agency that regulates securities, was not comfortable with the way ICOs rolled out. They didn't see an innovative capital raising campaign. They saw fraud, fraud, fraud. The Federal Reserve has been lukewarm because they deemed that Bitcoin itself and the other cryptocurrencies, and this has been a work stream that a number of work streams on cryptos that FSOC's been doing. The Federal Reserve said it doesn't affect the dollar, therefore our interest is much lower. Our OCC has been really innovative. They've licensed some lending institutions, sort of non-bank charters. That has gotten them the wrath of New York and some of the states where traditionally those types of activities are held. And then we, are very pro innovation in this space, and we have been pushing on Ether, and we did our Ether RFI. But without a cohesive, sort of here's where we stand, I think when we make a decision, yes, we're going to bring a lot. We're going to bring a lot of cards to the table. But the chairman of the CFTC just gave a speech for Eurofee, and I put some lines in there where I said, call out Switzerland and call out France, because they've actually leaned forward and put some things on paper that we can't say that we would totally agree with, perhaps, but it's something to work from. And they've actually, they've now allowed these companies to sort of show up and get some clarity. And I think through
From a broad level, because what you're saying is that all of these critical agencies internally in the United States are very fragmented.
Ask anyone who's ever had to deal with the U.S. financial regulator, they will say the one thing that drives them crazy is how many agencies there are. We like to think we're all perfect experts in our space, but it is madness. But I think Europe has stepped forward, and where we were thinking about this industry and where it may go, or this innovation, I think industry is probably a bad term, but where this innovation will go. 2 years ago, I think Europe was more skeptical. When I was presenting at IOSCO and talking about the swap execution facility that we had just licensed and how we were comfortable with it, because the clearing was going to be physically settled, there wasn't a lot of margin or any margin to deal with. And the looks from, we sit alphabetically, or I'm not sure how I think it's alphabetically, but I'm always across from France and Germany. And they both were like, what are you doing? But here we are 2 years later, and I feel there's a real comfort level in France for this innovation and sort of what's the clarity that people need and how can we get it. And so I think it's helpful, and I think the U.S. would be loath to adopt somebody else's rules, but I think once somebody gets out there with a blueprint, it makes it easier for us to start, all right, let's argue about what's on paper rather than just everything in the universe.
Yeah, I think makes a very good point there. And I guess looking from the OECD, it's a very international perspective, not just at Europe or America, but really across the globe. And seeing the start of different regulatory approaches develop is, I guess, if we look at other areas, and I don't think blockchain in the financial services space is unique in this regard, is that that's typically what we've seen in the development of what we'll call an international approach to different policy issues. That you see different countries start to try out different things which take into account their specific environment and their specific context and concerns. And over time, that helps organisations like the OECD work out how they might be able to help countries develop what might be best practice, taking into account your specific circumstances. And I think one very important thing that regulators have in common is that regardless of which jurisdiction you're working in, what you don't want to see is when you take a regulatory step is being undercut and having that regulatory arbitrage where players, industry players, are looking to jurisdiction shop, in a sense, and undermine what you're trying to achieve in your jurisdiction. And I think that's where you start to see this interest in having a conversation between regulators to make sure that no matter which approach we've all decided to take for particular reasons, whether that develops into a harmonised approach over time, but at least that there is coherency between those approaches so you don't have that arbitrage.
You'll always have that, I think. I mean, and to your point, Marius, is you know, being the Central Bank of Lithuania and being that monetary authority, you're providing really a product, as you said. It's not necessarily just about trust, which of course it is. It is also access to markets. And for Lithuania, it is an incredible access gateway to the EU, and also recently making headlines that Lithuania is seeking out Chinese fintech companies to work, partnership, and perhaps align with business interests and provide that kind of gateway and entree into a broader European market. So, you know, is this jurisdiction shopping? Is this, how is this kind of, you know, is this going to be unique in and of yourself? Or is there consultation? Is there truly international cooperation here, in your view?
Very deep question. So, Michael, you are worried with no reason. I think US is the global standard-setting body, specifically in this space, and more broadly speaking in financial infrastructure space, and that's what probably you want me to talk about. And the bigger elephant which is in the room, which I'm not sure I want to address, let's see how it goes, it's called geopolitics. You mentioned China. I'm sitting next to our strategic partners from a national security perspective. It's a very touchy subject. But once finance starts being used for that type of activity, then all of a sudden new initiatives arise. You know, if you start using SWIFT messaging for inclusion or exclusion of countries, Ripple comes about, and the other new ways of exchanging messages surpassing the watchful eye of the State Department emerges. Right? So I'm not saying this is good or bad. I'm just saying what is the driving force of some innovation. And there, we cannot escape this elephant in the room. We need to understand, which are the driving forces behind that process. And we need to balance the initiatives behind and make sure that regulators are not just making sure that the structures are bulletproof from a cybersecurity perspective, because you know what, the technology has been around for many years. If you really want to make it secure, there's a very easy way to do that. And yeah, but the most important thing, and the title of his session is here called cooperation, regulatory cooperation, and it's very difficult to achieve because the cooperation is being led not by the regulators but by the higher level initiatives.
Yeah, I mean, I think the two questions that you asked are sort of quite highly related. I mean, first, in relation to the sort of one country issue, I mean, we've done over the years an awful lot of work on regulatory fragmentation. And I remember when the chair of our board published the last cross-border task force report, he identified the main impediment to achieving consistency as being pre-existing standards. Now, obviously, in this technological area, it's very much a greenfield piece of regulation, and so there's perhaps less excuse for jurisdictions to just for their own idiosyncratic reasons adopt different approaches. And so you would have thought that in this area that if someone does come out with an approach that makes sense and is transferable to other jurisdictions, that the sensible approach would be to do it that way. And that's actually related to this shopping issue. I mean, prima facie, you'd say that regulators tend to be against jurisdiction shopping in the pejorative word, but we're in Paris, so how can we be against shopping? But secondly, our experience from our committees is that shopping is actually quite a useful exercise because a lot of people go out, they're looking to set up their businesses, they have to do a presentation in different countries or approach the regulator. To do that, they often have to hire a law firm. And some of the experience we get is they get quite tired if every single time they've got to hire a different law firm, do their pitch in a completely different way, redefine what they're actually doing. And so that process actually creates, as you've explained, the interaction between the regulatory authorities and industry, but also an understanding that, at least on the basics, if we have a common terms or common standards, it makes it easier to go out shopping.
Can I comment on this? It's not that it's the driving force is the regulatory shopping, which is, driving the response from regulators or regulatory arbitrage. I truly believe that different regulators have different circumstances that they're trying to address. If in Germany they are solving the issue of the excess capacity of the banking industry and the consolidation of that capacity, in some other corners of Europe we have a lack of competition and market entry. I'm speaking of myself, right? If our US colleagues, they're worried about the global financial system, which predominantly is based on US dollars being used for bad purposes, and that's a very legitimate reason, they have that objective at the top of their mind. And different regulatory objectives result, as you can say, in different frameworks. But we have ways in economics to maximize a function based on multiple objectives. And maybe that's what we in supranational forums should be talking about, and that's what we are talking about, how to achieve multiple objectives with a limited amount of cost to the industry.
And that ultimately is why I really applaud each and every one of you for spending time with all of us and really engaging so thoughtfully, candidly. And we know how busy all of you truly are. So to know that these conversations continue, not only just on this stage, but also with the guidance of many of those in the audience, because this is a global conversation that is still evolving from the regulatory side and from the innovative side. But I think that, when folks like you are also thinking innovatively, I think we are all in good hands together. So please, a round of applause for our panelists. And thank you, everybody.